over this rate cut. Everybody thinks the Fed is cutting rates, but differences of opinion on whether the Fed should cut rates. 48% say the Fed should not cut. 50% say the Fed should cut. Of the total, 13% say it should be 50.
Restoring price stability will likely require maintaining a restrictive policy stance for some time. The historical record cautions strongly against prematurely loosening policy. Committee participants' most recent individual projections from the June SEP showed the median federal funds rate running slightly below 4% through the end of 2020.
How's it going, everyone? Mario here. The term "don't fight the Fed" came true on Friday. This cocaine-addicted market was so gassed into believing that the Fed was gonna back out on rate hikes because of what? 1 month of soft CPI? Some people need a reality check, which is exactly what they got on Friday. SPY and QQQ had a nasty down day. I got a lot of questions about should I buy calls on SPY into close. The answer is, you are trying to catch a falling knife here, trying to go long. Don't complain when it cuts. Looking into the daily charts of SPY, that Friday candle was nasty. Close at the lows of the day, biggest drawdown of this year. The question is, where to from here? Remember, we are in a downtrend. Remove the noise and focus on the price action when it comes to trading. For now, price action says there is more pain to come. What are the levels to watch out for if we pummel lower? There is a zone in between 398 and 397.21. This zone is a very important area to keep an eye out for. If bears did another raid to the bull camp on Monday and gap it lower, we are most likely headed towards 395 and 390 to the downside. We sold off on Friday with a decent volume. There is something called Monday rule. Down Friday, down Monday. So watch out. Follow the price action. Volatility is spiking. Manage the risk very, very wisely here. High volatility environments can either make or break accounts. So be very careful with the trades you pick. In case of QQQ, same markets, nasty close. If we get a gap down on Monday, and if QQQ opened under 300, watch out for 297 and 294 to follow. Follow the price action, manage the risk. Now, moving on to the small account update for week 2. We are having an experiment that's been going on with small account where we started with $42 and took it to $80 last week. In the last week's video, I mentioned I added $200 to this account so I can mess around with the trades. This is the end of the week report. I share this here to hold myself accountable on the trades. Trading with small account can be challenging as you got to be A+ on the risk management side. We will go over the trades and we will look at why we took it and the mistakes that's been made. We've got 2 contracts of lift puts on Monday. 1550 strike when lift broke 1575. The goal was to hold it till the contracts get in the money. As soon as it happened, I scaled out of one and sold another at near 1540. That's it. That's the trade for Monday and I called it a day. Tuesday, we followed this ride-hailing platform theme and then went short on Uber. Went short at the rejection of 28.50. Plan was to scale out a few contracts at $28 or $27.90 and sell the rest at $26.74. Though I secured profits on half of the contracts when Uber hit $28 on the same day, I got stopped out on the runner because Uber went on an absolute tear on Wednesday and Thursday. The point here is, we scaled out when the contracts were near support and got the stops lower on the runner. So we still closed the trade on a profit. It's a win-win. On the same day, I also scalped some Oxy calls. Got in at 73 strikes. Goal was to scalp it when Oxy touches the highs of August 19th. Once we hit the target, I got kicked out of the trade. That's the end of day 2. Day 3 is all about semiconductors. I went long on AMD at the test of 91.98. Got the 92 calls. Goal was to secure profits at the lows of August 23rd, which is at $92.13. Once AMD hit the target, we were out of the trade for profit and called it a day. Thursday was a weird one for me. made a mistake which I would like to share with all of you. This has everything to do with risk management. I got in CRM 170 calls for $175 approximately. Though this setup was perfect, everything was on point, the delta on those 170s were around $40 to $50 each. So technically, for every half a cent, I'll be losing $20 to $25, and for every dollar, my contracts will be down $40. The entire size of my account at that point was at 325. When this candle happened, I got stopped out. But in reality, all they did was come back to run a test to the support levels before taking off to our next target at 170, followed by 175 the next day. But we are dealing with a small account here. Can't be taking way more risk, which will put our entire account in jeopardy. Though the trade setup was good, the risk management side was not executed well by me. So I'm considering it a loss and stop trading for the day because it didn't sit well with me psychologically. On Friday, what a nasty day. I made one mistake and I had one winner. 2 trades were taken. I went long on Baba with 104 calls after Powell to recapture the bounce. The goal was to secure profits at highs of the day at around 104.50 and change. The initial plan was the momentum which SPY was having. I wanted SPY to break above 420. So once I saw SPY getting rejected at 420 and coming back to 418, I had to cut losses immediately because my thesis was wrong. So as soon as I saw SPY breaking below 418, I went short on Caterpillar. CAT was flirting under 100 SMA in the morning. After Powell, they had a goose operation which pushed it back to hold above the support line at 199.21. But once SPY broke 418, I took the risk on 195 puts on Caterpillar expiring next week. The goal of this trade is to close the trade at the lows of the first 15-minute candle after Powell, which was around at 197 and change. As soon as the number got hit, I got out of the trade and called it a week. By the end of the week, the portfolio was up 17%. One thing you gotta understand with this challenge, it's not about making money or losing money. The only thing that matters is whether your winners overall are bigger than your losers. The risk management is the first important thing to follow. It's easy to blow up the account of this size. Got to be very picky with the trades you select. I will be moving the $46 of profit to my spending account and start over again with $280 next week. Paying yourself is very important. The first main goal of this challenge is to take the initial investment back, which will be $242 that we invested. If you want to get updates on this experiment on a day-to-day basis, check the Discord link and join the Patreon. Link is down below in the description. As always, take high probability trades, manage the risk wisely. I'll see you guys in the next one.